Silver is finally catching up. Gold is being rewoven into the monetary fabric of the globe. Business has gotten really busy lately, but busy, I would argue, with much more well-heeled investors that are getting concerned. The world is moving away from treasuries and dollars and paper promises, and then you add on to it sanctions and tariffs. After 4 years of nightmarish domestic and foreign policy, prior to this administration, you could argue a system that is fully based on trust has squandered.
You're watching Silver News Daily. Subscribe for more.
They said it would never happen. That $100 silver was a fantasy, a pipe dream reserved for conspiracy theorists and newsletter cranks. But now it's staring us right in the face. Because behind closed doors, the very institutions that mocked silver are preparing for its explosive revaluation. The CEO of Miles Franklin has just pulled back the curtain on a 45-year chart pattern that doesn't just suggest higher prices, it screams it. And the numbers are staggering. A confirmed technical target of $96 to $100 per ounce. But that's just the beginning. At the heart of this surge is a coordinated reset, the kind of reset that doesn't make headlines until it's already too late. And who's orchestrating it? According to multiple insiders, it's the Trump-aligned economic strategists laying the groundwork for a full-blown monetary overhaul. The dollar is being sacrificed, and in its place, gold and silver are being repositioned as strategic monetary assets. Think that sounds dramatic? Then explain why gold is already trading above $3,700, with institutional buying hitting record levels. Explain why the U.S. government just reclassified silver as a critical resource, imposing tariffs and triggering a scramble for domestic stockpiles. This isn't speculation, it's a playbook. One that's been quietly unfolding for years, and now, with inflation raging and confidence in fiat crumbling, the final act has begun. So what does all of this mean for you? Why are top analysts suddenly calling for a silver price explosion not in years, but in months? And why are major banks preparing for gold to leap past $6,600? Stay with me, because what you're about to hear could completely rewrite your understanding of the financial system and your place in it.
Well, I mean, it's physical demand coming into the Comex, coming out of London, coming out of Switzerland. The demand is off the charts. The lease rate in London, which is typically 0.5%, rarely gets above 1 or 1.5%, even in times of stress, and then it would typically only be for a short period of time. The lease rate is the rate at which it would cost to borrow bars to short or to cover a position, is as high as between 5 and 6.5%. And that's an anomaly, to say the least. It signals great tightness inside of the market at the highest of levels. The amount of silver that's coming into the Comex is off the charts. From a technical formation, you have a 45-year cup and handle that might be as powerful of a formation as you will ever find in technical analysis, especially one that is mature as silver. 45 years, and the way that it works is the beginning of the cup would have been 1980 at $50, and then it goes down to the bottom, the shape of like a bowl or a cup, to $4 or thereabouts in the early 90s, and starts to come back up to 2011, almost to the top of the cup, doesn't preach it, comes down in consolidation for the handle, and here we are at basically $44, very close to moving back up. Now, the way that works is once you breach that level, the top of the lip of the cup, the $50 level, first of all, there is no resistance at all. But the way technical charting would work is that you take the difference between the top of the cup and the bottom, which is approximately from 50 to 4, about $46. You would add it onto the top, and your next target upside would be $96, 96 to $100. Is that crazy? No, it's not. I mean, triple-digit silver is something one could expect at some point. And then when you realize that the government reclassified silver now as a critical element, a critical mineral, they've put a floor under the price of silver. And so I think, all of the talk over the last 6-7 months, and I said no from the get-go, this is not about tariffs. Never was. It was a ruse to bring it all back. This is reshoring. This is understanding that the biggest money in the world understands the significance of things like silver. The biggest traders here in the United States, the institutional traders, when they start to pay attention, when they start to accumulate, we should all pay attention. We've been talking about this on a central bank level for a few years now, about the deliveries into Comex for a few years now, about the accumulation by India, by Russia, by Saudi Arabia, by China. China flying around the world and buying doré when they're the second largest producer in the world, sending it back to China for refining. Why would the second largest producer of silver in the world find it necessary to fly to Latin America to buy concentrate and doré directly from a miner, pay double what the West will, ship it back for refining if it were just this this rock that hasn't done anything forever? And I don't know, silver right now feels to me like gold did about a year ago when it was right in the 21.
Silver has officially broken free. For the first time in over a decade, it's blasted through the $44 resistance level, a wall that held firm for nearly 14 years. And this wasn't just any breakout. This was the trigger point of a technical formation that's been building for nearly half a century. Analysts are calling it a generational cup and handle pattern. And when these patterns break, they don't just move, they erupt. We've seen this before. In the early 2000s, gold completed a similar setup and went on to triple in price. Now, silver is setting up for a mirror image move, and the projected target? $96 to $100 per ounce. As of September 2025, silver is trading between $41 and $44, already up more than 42% on the year. But this is just the start. The breakout didn't just crack resistance. It shattered confidence in the bearish case. Institutional money, which had been sitting on the sidelines, is now flooding in. Technical momentum is driving massive volume, and traders are scrambling to position themselves before the next leg higher. And make no mistake, this is no retail frenzy. The FOMO right now is being driven by hedge funds, asset managers, and even sovereign wealth funds that finally see what's happening. The setup is too clean, the upside too massive. Some experts are calling for a short-term move to $52, but that's just noise compared to what this pattern suggests long-term. Because this isn't just a technical breakout, it's a confirmation of something much bigger. That the monetary system is shifting, and silver isn't just along for the ride, it's leading the charge. But here's the kicker. Price action alone doesn't explain the urgency. There's another pressure point building, one that's already causing physical chaos in the silver market. And when it boils over, even $100 might look conservative.
$120 to $100 range, and it kept trying to break out and would, consolidate and try to break out, come down, consolidate in a long period of consolidation, and then broke through, and it hasn't looked back. I would say that's about where silver is right now. I look at it as the most undervalued asset in the world, and now evidently the United States finds it significant enough to call it critical. I think there are very few opportunities asymmetrically where you have such low downside and such high upside being asymmetrical. For an asset like this, it's once a generation. So I think the drivers are big money waking up. Now, you could argue that the public is not even part of this rally yet. What happens when they collectively wake up? This is being driven by people at the highest of levels before the public catches on, which is another contrarian indicator. So, yeah, I think what's driving gold and silver is that silver is finally catching up. Gold is being rewoven into the monetary fabric of the globe. And thankfully, someone in this administration, I think, grabbed President Trump and said, if we don't do this, we will forever regret it. This is our last opportunity to bring some of this home because the world is moving away from treasuries and dollars and paper promises. And then you add on to it sanctions and tariffs. After 4 years of nightmarish domestic and foreign policy, prior to this administration, you could argue a system that is fully based on trust has squandered the majority of it. And then, look, I would vote for President Trump again, but I don't agree with the way he is antagonizing even his allies, like India, as an example, throwing on 50% tariffs, and many of the other countries in the European Union and Canada. Maybe there's something bigger at play, which we've talked about a lot, but I think it's just beginning, quite frankly. Look, you have a comment coming out of Goldman Sachs a couple weeks ago that if the market even thinks that the Fed has lost independence, well, okay, the firing of Lisa Cook, who's going to go in there? It'll be a Trump bobo. You look at Stephen Murin replacing the last Fed official who left, who is the author of the Mar-a-Lago Accord. The Fed has lost independence. And mind you, this is nothing new. You go back through history, you'll see this happening with multiple presidents, but it's like they give you crumbs and the crumbs, well, we told you that this could happen. And now you have, banks talking as high as $6,600, $4,000 being base case for most of these banks. Look, you put silver at 5,000, like Goldman says, and divide it by 70, which would be, way higher than its average for the past 100 years, and still 10 times higher than it's coming out of the ground at. You're talking $75 silver or thereabouts. So, to me, this is just beginning, Elijah. Honestly, I do believe that. And I think this is the time that most of us have been talking about as, typically following suit way early. But I'd rather be months and even years early than 60 seconds late when the switch flips on this.
Something's breaking in the physical silver market, and it's not just supply. It's trust. Premiums are exploding, delivery windows are stretching from days to weeks, and lease rates in London are now sitting at a staggering 5 to 6%. These numbers are not normal. They scream shortage. They scream panic. What we're seeing is the early stages of a full-scale physical squeeze, the kind that collapses the paper-to-physical price disconnect and sends shockwaves through the entire financial system. Just look at Comex. In August alone, warehouse inventories hit a record 507 million ounces. But that number is deceiving. Most of that silver isn't truly available. It's being hedged, leased, or earmarked for delivery. Meanwhile, LBMA inventories in London have plunged to just 155 million ounces, a 140-year low. That's not a typo, 140 years. The last time silver was this scarce in London, horse-drawn carriages were still common. And yet, retail demand hasn't even gone mainstream yet. High net worth individuals are buying, dealers are rationing, and product premiums are soaring. Try ordering a 100-ounce Johnson Matthey bar. You'll pay over $2 an ounce above spot if you can even find one. The reality is simple. There's not enough silver to go around. Industrial demand is off the charts. Institutions are pulling physical metal out of circulation. And the few who understand what's happening are locking in whatever supply they can get their hands on. This isn't just a squeeze, it's a battle for remaining inventory. And the wider this physical disconnect grows, the more violently the price will correct to the upside. But what's driving this squeeze? Who's accumulating all this metal, and why are they doing it so quietly? The answer lies in the shadows of the financial system, where central banks and insiders are making moves the public hasn't even begun to notice.
Business has gotten really busy lately. But busy, I would argue, with much more well-heeled investors that are getting concerned. It's easier to make money than it is to keep it. And I think a lot of people who have, maybe they're getting towards the twilight of either their career or of their lives, and they're looking at things that are unfolding here. There's a very deep interest all of a sudden. But to your point, yeah, the public is still largely anesthetized when it comes to the merits. I've talked, and I'll get to your question on the premiums, but I've talked at length with people like your father over the last few weeks, where we see all-time high participation in the stock market at about 55% by the public, highest ever, higher than the 1929 peak. higher than the .com anytime. And along that same lines, you have the highest participation of the retail crowd in options ever, which is speculation, and the highest margin debt, over $1 trillion ever, which is leverage. So the public is all in on speculation and all in on leverage, as the insiders, Warren Buffett sitting on $500 billion in cash, Bezos selling $7 billion in Amazon since June 1st, the insiders at NVIDIA dumping shares, the board members, the insiders, Jamie Dimon, all of these people selling stocks, Zuckerberg, the insiders are selling at a 7-to-1 clip. The institutionals have been selling between $2 and $4 billion a week since June. And so you have the insiders with the information leaving and the public all in on leverage and margin and speculation. And then the other end, you have deliveries coming into Comex that no one has ever seen before. At the same time, the public has zero exposure to it. So you talk about a contrarian indicator on both sides. It's enormous. The premium thing is the strangest thing I've ever seen in my career. You're right. The Eagles are going up, both gold and silver. The U.S. Mint hasn't made any platinum Eagles in at least 2-3 years, none this year. We'll see if they make them next year. The rumor is they're not. Platinum is very similar to gold in terms, in my mind, of its manipulation, its setup. You have the head of the Japanese Tokyo, the TOCOM, Tokyo Commodity Exchange, who says, look, London is trading 3 million ounces a day of spot contracts, deliverable platinum contracts, but there's no platinum in the vaults in London or Switzerland to deliver. You look at the chart that Ed Steer, that your dad has showed it about Ed Steer, the shorting on Comex, it's silver #1, platinum #2. There's a lot of value in platinum, but the spread.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
This way, man, I remember vividly when gold finally broke through $400. I was a very young man at that time, and gold just forever was between $250 and $375, $80. And just like we see right now with, when the market was trying to break through 2,000 in gold, or when silver is trying to, break through 44, it keeps coming up, and it would just bang its head against that resistance. And I remember it finally breaking through 400, thinking, my goodness, here we are at $400. And then it broke 850, like, oh my God, we're finally there. We're finally at all-time highs. And if you would have told me that we would be at nearly $3,800 on gold, and really no one hears about it, you rarely see it. Yeah, you see it on the ticker a little bit on CNBC or Fox, but it's not discussed. Jim Cramer, this idiot, just comes out and makes a tweet saying, I just wish we'd stop seeing all of this, irrational speculation in gold. And I'm thinking, you're just a moron. Where have you been the whole way? And is it irrational, or is owning stocks at the highest level of valuation ever, with the largest allocation of the retail public ever, and the largest margin participation by the public ever, and the largest option participation by the public ever, as the inside money is going the other way? I mean, the guy's just an idiot, but this is why people don't get it, because unless you're spending time watching Liberty and Finance or Miles Franklin or Peter Schiff or any of the people out there that are doing this work, Vince Lancy, I mean, there's so many good ones. I don't mean to disrespect anyone by not saying Gregory Manarino. I mean, the list goes on and on and on. And if you're not paying attention, you don't see this. You don't get it. You don't know it. You may hear this and that. You may go try and buy a a necklace for your wife or your girlfriend's, anniversary or whatever, and realize, wow, gold's expensive right now. But people at large don't understand it. They don't view it. It's become so removed from the collective conscious of the public. And so, yeah, I mean, the big money is waking up to it, no question. And when I say big money, I think there's a duty when you have that kind of money to think. And I'll tell you that, and I mean, I'm serious about this. Where do you put your money at a certain point is very difficult, right? You got interest rates that on the short term, the very short term interest rates, which are coming down. I think you'll see the opposite on the 10-year. Will move the other direction, just like it did before, just like we see in London, where they've lowered rates 7 or 8 times, and yet
While the public watches stocks and crypto charts, central banks are quietly rewriting the rules of money, and they're doing it with gold. In the first 3 quarters of 2025 alone, global central banks purchased over 770 tons of gold, pushing prices to a record-breaking $3,700 per ounce. That's not diversification, that's a signal. A signal that trust in fiat currencies is collapsing at the highest levels of government. And when central banks move into gold, they don't just hedge inflation, they're preparing for a monetary transition. But here's what most people are missing. When gold moves, silver eventually detonates. Always has. Always will. Gold leads, silver follows, and it follows hard. This central bank buying spree is already dragging silver higher, but we haven't seen the main event yet. Why? Because silver is the monetary metal of the people. Central banks hoard gold. Institutions hedge with silver. And as gold gets revalued, silver starts to look impossibly cheap by comparison, especially with the gold-to-silver ratio still at historically high levels. And it's not just central banks. Sovereign wealth funds, family offices, even university endowments are loading up. Harvard just disclosed major physical gold purchases. These players aren't gambling on ETF swings, they're securing tangible assets. The kind that survive resets, devaluations, and trust breakdowns. And while they're locking up physical metals at record pace, the average investor still believes the Fed has everything under control. But they don't. The monetary system is bleeding credibility, and gold's surge is only the beginning. The revaluation is already underway, and as it accelerates, silver won't just catch up. It will slingshot. But the groundwork for that slingshot isn't just being laid in vaults. It's being written into law. Because now, the U.S. government isn't just watching from the sidelines. It's stepping in to redefine silver itself.
on all of those accounts, not to mention fiscal irresponsibility. We talk about, August being a huge month for tariffs, like 85 billion, yet the deficit for the month was 350 billion. So our spending is out of control. Our reputation is maybe irrevocably damaged. And the biggest money in the world is showing you, whether it be the central banks around the globe or now the institutional traders here in the United States, or whoever the hell it is bringing in billions a week in gold and silver into Comex, that these metals are far more important than the currency that is being used and conjured up to purchase it. And honest to God, in my soul, I feel like this is just the beginning. I guess we'll see. And I want people to know, I never tell you to buy metal to get wealthy. It is wealth. And that's what I think we are seeing. It's going back to its historical placeholder of wealth. And yeah, you own enough, you will be wealthy. You don't buy it to get wealthy. I think you have that opportunity with silver, but I would never tell someone to do it for that. If you buy it for the right reasons, because the system is dying and it is sick, it is diseased, and the biggest money in the world, who knows the playbook, is showing you that this is a very significant part of their path to the other side. So yeah, I think that is what's driving it, and premiums will go higher. When you listen to what Rick Rule says, 0.5% allocation, right? Getting product, if you get to a 5% allocation of the retail public, of Joe and Jane Sig, he always would say something interesting, Elijah. He would say exactly, 1/2 of 1% allocation in precious metals and precious metals equities from Joe and Jane six-pack to the Harvard Endowment Fund. But what did we just see a few weeks ago? The Harvard Endowment Fund buys, I don't know, over $100 million worth of gold, I think was the number. So things are changing. Institutions are embracing. Big money is waking up, and so too will the public. Of course, it'll be far too late for most people because they move after the big money is fully positioned. We're watching the big money get positioned on Comex and all the deliveries off of the world's exchanges, including the Comex. A lot is being stuffed in there by big money, but a lot's leaving too. We don't talk about that enough. Where's it going? Who's taking it? It's just beginning.
Silver is no longer just a commodity. It's now a matter of national security. In 2025, the U.S. government quietly reclassified silver as a critical element, putting it on par with strategic metals used in defense systems, energy infrastructure, and advanced manufacturing. That single designation changes everything. It means silver isn't just valuable. It's essential. Essential for technology, essential for sovereignty, essential for survival. And with that reclassification came the real shock, a 25% tariff slapped on silver imports from Canada and Mexico, two of America's biggest suppliers. Overnight, the traditional flow of silver was disrupted, triggering a chain reaction through supply chains, premiums, and domestic stockpiling efforts. But why now? Why is the government so desperate to lock down silver? The answer is hidden in the deficit numbers. We are now in our 5th consecutive year of global silver supply deficits. That means every year, more silver is being consumed than mined. Industrial demand is surging, investment demand is climbing, and mining output isn't keeping up. Above-ground inventories are being quietly drained, even as Comex warehouses appear to show surplus. But those inventories are deceptive. Much of that metal is there because traders are hedging against the tariffs, not because supply has somehow improved. The truth is, the real availability of silver is falling fast. And when the government starts labeling silver as critical, that sends a very different message to institutions and insiders. It tells them the floor is in. It tells them silver will be protected, subsidized, and possibly even used as collateral in future monetary restructuring. It tells them silver is now a geopolitical asset, not just a market trade. And once that shift happens, the psychology of the market transforms. Investors no longer ask, "What's the price of silver?" They ask, "How much can I still get?" But the real bombshell isn't just that silver is being reclassified. It's that the market where it's traded is quietly being emptied by insiders who know exactly what's coming. And once you understand what's happening at Comex, you'll see why this isn't just another bull cycle. It's an engineered transition.
Demand we will see when people realize that, the stocks that they own are at all-time highs and the insiders are leaving, that the bonds that they own are losing demand globally. I would not be surprised one bit to see bonds be a 4-letter word. Well, it is BOND, but a real nasty 4-letter word by the time it's all said and done. And I don't know. I just think it's time for people to own some gold and silver in their portfolio because it is wealth that is simultaneously no one else's liability, that the biggest money in the world has been buying for years, and now the biggest and most well-informed institutional traders in the United States are doing it too. And who they are is another issue. Who is it? Why are we not hearing these massive deliveries that are just literally record-breaking, it seems seemingly every month? No one's talking about it. That in and of itself, another contrarian indicator. And these are the people who spend billions of dollars. They do not do these things just for the hell of it. My guess is they understand where we are going, whether they have the roadmap to it or have been, cued into the roadmap. I think you do what the biggest money in the world is doing. Stop listening to the Jim Cramers and stop listening to your advisor and trust your gut. In the end, I think you'll be glad you did. And instead of jumping in with both feet, as someone silly enough like myself may do, I would say cost average your way through, and you'll end up smoothing out that uncertainty curve, since really none of us have a crystal ball, at least any that work. And do a little bit of research like you do, like I do, like your dad does, like anyone who's on YouTube does. And if you do enough research, you come to the same conclusion we all have, that really it's silly to not own any. In fact, you look at things, the world, very differently. Like, you put all your money in stocks and bonds? Really? Most people would say the same thing about us. That'll change, and I think we're on the cusp of that kind of sea change. So anyways, not to wax poetic so much, but I don't know how you can get people to see that this is not just for the sky falling. It's good for that, of course, but it's also good for opportunities that will present themselves when the dust settles. And this, we'll find our way through this, but it's going to come at an expense. And I guess we'll see whatever that swan is that triggers the collective awareness. But
The Comex is supposed to be the heart of silver price discovery, but right now, it's looking more like the epicenter of an engineered run. In May 2025 alone, over 81 million ounces of silver were delivered through the Comex, 16% of all registered stock gone in a single month. That's not normal, that's historic. And it's not retail doing the buying. It's institutions. It's sovereign entities. It's insiders pulling physical metal off the exchange and into private vaults, far away from the prying eyes of regulators and media. At the same time, inventories appear to be rising, but that's part of the illusion. Comex shows 507 million ounces in stock, the highest in years. But this isn't a sign of abundance. It's a signal of panic hedging. Traders are moving metal onto the exchange not to sell it, but to secure it, to position ahead of further tariffs, further disruptions, and possibly even capital controls. And while registered stocks rise, available inventory falls. Settlement delays stretch for weeks. Premium spreads widen, and the signals are all there. This is positioning, not liquidation. And here's what should really scare you. The retail investor is still largely absent. Direct retail exposure to silver remains under 1% of financial assets. That means the real squeeze hasn't even started. What we're witnessing is the quiet phase, the insider accumulation before the herd wakes up. The playbook is nearly identical to what happened in gold during the 2000s. Stealth accumulation by institutions, followed by a price eruption when the public finally catches on. And it's not just physical delivery. The structure of the market is breaking, paper claims are multiplying, lease rates are spiking, and the very mechanism that's supposed to ensure liquidity is being drained by the very people who understand what's coming. This isn't a price rally, it's a dry run for a full-blown monetary overhaul. And it's being orchestrated in silence, trade by trade, bar by bar. Because when the next chapter begins, the Comex won't be a marketplace, it'll be a battleground, and those holding paper will be holding the bag. But to understand where all this is heading, we need to zoom out. Because silver's price isn't just being moved by market forces, it's being pulled by a much bigger shift. The rewiring of the global financial system is already underway.
Are high because the availability of product is low. It's a strange time, and maybe the reason you're seeing the Eagles go up is that when a lot of the new clients that we have, the big orders that we are doing, the people want gold and silver Eagles. There's a certain level of comfort for a lot of people. You have, as we've talked about at length, 11 states already that recognize precious metals, many of which is specifically gold and silver Eagles as legal tender, and the U.S. Mint can't keep up. So the primary distributors who buy all of the large shipments from the mints, when the mints run out of product, the primary distributors now become the de facto market makers, and it's a function of supply and or demand. Spreads are very high right now because the price is getting higher. I remember, just a few years ago, like even with $1,500 gold, you're talking $30,000 for a tube of silver Eagles. Now they're almost $80,000. And so cost of inventory is getting higher. Our premiums are going higher. And there's volatility that we expect to see based upon what we have seen for a very long time. But maybe the rules are being rewritten. Maybe things are changing. Maybe the government, for once, is going to let the price go higher instead of stepping on it through levered futures contracts. Maybe this has a lot to do with all the metal coming back, the reclassification of silver as strategic or critical, all of the talk of gold being woven into the back end of the treasury market. He who has the gold makes the rules, says Trump. There are a lot of reasons to think that maybe this time is different. Now, usually when you hear that, you should run. This time is different. But I will say it does feel different. Ultimately, we'll have to see how it plays out, but I don't ever remember in all of my years doing this, Elijah, which is almost 36, seeing a market with this continual strength, and every time it's hit, it just comes right back. That is a characteristic that is certainly new, and feels like, they're just going to let it go much higher, in particular with gold, making the revaluation at some point much easier, and increasing the value of the holdings that they have. And if they really are going to revalue it, like a lot of people talk about, myself included, James Rickards, Mike Maloney, the Federal Reserve, Senator Lummis from Wyoming, keep on going on, Judy Shelton, if they do, starting from a much higher peak or plateau, from a much higher base, would be beneficial to them. And when you see banks saying, okay, now it's 4, now it's 5, now it's 6, they keep on raising their targets, which is interesting. And I don't know. I think, honestly, that this system needs to go back to some form of truth, some form of credibility, some form of trust, because what we have right now is really failing. This way, man. I remember vividly when gold finally broke through $400. I was a very young man at that time, and gold just forever was between $250 and $375, $80. And just like we see right now with, when the market was trying to break through 2,000 in gold, or when silver is trying to, break through 44, it keeps coming up, and it would just bang its head against that resistance. And I remember it finally breaking through 400, thinking, my goodness, here we are at $400. And then it broke 850, oh my God, we're finally there. We're finally at all-time highs. And if you would have told me that we would be at nearly $3,800 on gold, and really no one hears about it, you rarely see it. Yeah, you see it on the ticker a little bit on CNBC or Fox, but it's not discussed. Jim Cramer, this idiot, just comes out and makes a tweet saying, I just wish we'd stop seeing all of this, irrational speculation in gold. And I'm thinking, you're just a moron. Where have you been the whole way? And is it irrational, or is owning stocks at the highest level of valuation ever, with the largest allocation of the retail public ever, and the largest margin participation by the public ever, and the largest option participation by the public ever, as the inside money is going the other way? The guy's just an idiot, but this is why people don't get it, because unless you're spending time watching Liberty and Finance or Miles Franklin or Peter Schiff or any of the people out there that are doing this work, Vince Lancy, there's so many good ones. I don't mean to disrespect anyone by not saying Gregory Manarino. The list goes on and on and on. And if you're not paying attention, you don't see this. You don't get it. You don't know it. You may hear this and that. You may go try and buy a necklace for your wife or your girlfriend's, anniversary or whatever, and realize, wow, gold's expensive right now. But people at large don't understand it. They don't view it. It's become so removed from the collective conscious of the public. And the big money is waking up to it, no question. And when I say big money, I think there's a duty when you have that kind of money to think. And I'll tell you that, and I'm serious about this. where do you put your money at a certain point is very difficult, right? You got interest rates that on the short term, the very short term interest rates, which are coming down. I think you'll see the opposite on the 10-year. Will move the other direction, just like it did before, just like we see in London, where they've lowered rates 7 or 8 times, and yet
The dollar is dying, slowly, strategically, and by design. And in its place, a new monetary architecture is taking shape, one that doesn't rely on promises, paper, or trust. It relies on weight, on purity, on metal. What we're witnessing isn't just a silver rally, it's the quiet rewiring of the global financial system, a shift away from fiat dominance and toward hard collateral. Gold and silver are no longer just inflation hedges. They're becoming the scaffolding of a post-dollar world. Look around. The BRICS Plus Alliance is accelerating its push for a commodity-backed settlement system. Central banks are loading up on gold, and sovereigns are hoarding silver behind the scenes. The Federal Reserve and Treasury have stopped even pretending that inflation is under control. And while the public focuses on interest rates and CPI reports, the real move is happening in vaults, tariffs, and trade deals. Why is silver at the heart of this transition? Because silver isn't just a monetary asset. It's also industrially indispensable. Unlike gold, which mostly sits in vaults, silver gets used, consumed, and lost. It's essential to solar panels, electric vehicles, and the entire digital infrastructure we're now betting the future on. So as the monetary system is rebuilt around commodities, silver wears 2 crowns. It's both the metal of the people and the backbone of modern industry. And the data proves it. While fiat currencies bleed purchasing power, silver is being redefined, not just as a store of value, but as a strategic necessity. We've seen this happen before. In every major currency collapse throughout history, gold reemerges first as a reserve. But silver always follows, usually more violently. Because silver bridges 2 worlds, monetary and industrial, and that makes it the perfect weapon for a system looking to anchor itself to reality. But here's the kicker. The public still hasn't noticed. They're not accumulating. They're not hedging. They're not prepared. And when they do finally wake up, the scramble won't just be chaotic. It'll be catastrophic for those caught on the wrong side. Because silver's role isn't just being rewritten, it's being rediscovered.
their 30-year treasury is pretty darn well near its all-time high. The bond market controls the back end, but I wouldn't buy the back end anyway. I would own some 6-month treasuries or shorter duration, and those are coming down. Where do you put your money when inflation, the real level of inflation, is far greater than the interest that you're receiving for something as safe and liquid as a treasury? What happens if Trump gets his way and they lower rates 200 basis points to 2%? And the CPI, which is at 3.1% right now, is actually higher than the rate that is stated. The big money won't stand for that. We know that the CPI, because you've had John Williams on this show, will tell you it's 11% right now. Add an 8 to it, the way it used to be measured before they changed it. Point of it is where do you put your money? Stocks at all-time highs, bonds at not quite all-time highs, but losing demand rapidly, so much so you create something called the Genius Act, which it is kind of diabolically genius, to create synthetic demand for U.S. treasuries because the organic demand is waning. Where do you put it? You put it in real estate at all-time highs. You put it in banks that are over-leveraged and undercapitalized, where you are now a unsecured general creditor with bail-in laws. So yeah, I think there will come a moment where the public at large realizes this, but the big money is asking these questions every day. What do I do with all this money? And no one would have ever thought that having that kind of wealth would be such a pain in the ass, such a difficult thing to safeguard. And as you get older, you're more concerned about protecting than you are making, because, you're thinking of your children and your grandchildren and how do I pass it on appropriately. Interest rates spike in an environment where there's that black swan. Well, the banks are in trouble, the insurance companies are in trouble, the bond market's in trouble, the stock market's in trouble, real estate's in trouble. Where do you go? And I think people are realizing this. And, it's kind of a softball question for a guy that owns a precious metals company, but if people haven't figured out by now that I try to be as genuine as humanly possible, that I do as I say, they never will believe me. I will just simply say, to me, there are very few places where I think you can safely keep your money with a high degree of liquidity, where the biggest money in the world is showing you through their actions where they're going. And I think you will see that public catch on. But typically, the big money, well, they do this in the cover of darkness, where you got guys like, Jim Cramer, moron, saying, it's too speculative, it's frothy. They're not looking at this the right way, and they're not really part of it. But there are a lot of people who are clued in and understand where we're going and what's happening, that are buying gold and silver as a life raft. And that's the way that I look at it, but not just for an emergency, right? It's for an opportunity as well. And maybe having that dry powder in the form of something that is keeping its purchasing power against a dollar that's down 11% this year and gold up over 40, it's keeping its purchase. You go back as far as you want, and I can make this analogy in real estate.
The trap has been set, and the public is walking straight into it, eyes wide shut. While institutions are clearing out vaults and central banks are rewriting the monetary playbook, the average investor is still stuck in the fiat matrix, chasing tech stocks, meme coins, and rate cut rumors. Silver remains one of the most under-owned assets in the world, with less than 1% of financial portfolios allocated to it. That's not just low, it's historic. And it means the next phase of this reset hasn't even started. But when it does, it will be fast, violent, and irreversible. Experts are warning of a public catch-up phase, a moment when mainstream investors suddenly realize they're unhedged, unprepared, and dangerously overexposed to paper promises. We saw a preview in 2021 during the short-lived silver squeeze, when retail investors briefly stormed the market and dealers were wiped out overnight. But that was a spark. What's coming is a wildfire. The signs are everywhere. Premiums on physical silver are spiking. Popular products are constantly back-ordered. Mint supply is rationed. And yet the spot price still lags behind the true cost to acquire real metal. That's the disconnect. Paper markets pretending everything is fine, while the physical world screams otherwise. And as more people realize that silver isn't just undervalued but underowned, demand will go parabolic. And when retail finally moves, it won't be orderly. The market isn't built for a rush. Supply chains are fragile, inventory is thin, and the institutions who've been quietly stacking will not be selling. They'll be hoarding, waiting for multiples. That's the moment where silver shifts from a trade to a lifeline, from an investment to a necessity. Because by the time the public understands what's happening, it will already be too late. The system is changing, the rules are changing, and the smart money has already moved. The only question left is, will you move before the crowd or with it?
Anything, gold maintains its purchasing power, and most other items across the board, from food to energy to real estate, measured in gold, it's becoming cheaper and cheaper and cheaper as things measured in dollars are becoming more and more and more and more expensive. You can pick anything you want, automobiles, college tuition, and I have an answer for it. And that's the scary thing. I wrote one thing down to kind of show that it just kind of caught my attention. And it's just very simple. In 1978, a student working full-time summer job at the minimum wage of $2.65 an hour could earn roughly $1,378, which was more than enough to cover the average tuition and fees of $688 at a public university. So when you talk about inflation outpacing standard of living, it's extraordinary. But if you look at gold, at its value, since then, since 1978, when it would have been priced at, I don't know what it was back then, a few $100s anyway. But point of it is that, look at where gold is today from where it was then. In fact, let's just look real quick just to make the point. We'll see where gold was in 1978. What was average gold price in 78? Was $193.4. So if you are earning minimum wage and you're able to make, what did they say, 1,378. So 1,378 divided by 193.4. Well, you would have bought 7 ounces of gold with your minimum wage summer job that today would be worth $26,000. So that would cover your tuition in most public schools. You know, a lot of the highfalutin ones are going to be 3 times that, because college is probably a poor example showing how much it's outpaced itself. But point of it is that, you know, what is $1,100 worth in fiat versus in this term? I just think it's important to understand that gold and silver have done a wonderful job in the face of a dollar that is destined to continue to lose purchasing power and probably accelerate, because that's the whole premise of what they're trying to do, not only of what Trump wants to do, but Stephen Murin, who's now on the Fed and the architect of the Mar-a-Lago Accord, which speaks of a weaker dollar to stimulate and bring back manufacturing. So yeah, saving in dollars are destined to go broke, period.
This isn't just another cycle. This is the end of the old system and the emergence of something entirely new. For decades, silver has played second fiddle to gold, dancing in the shadows while governments, central banks, and Wall Street manipulated its price through paper games and manufactured doubt. But now, the game has changed. All the forces that once suppressed silver are either breaking down or actively reversing. This time, silver isn't rising because of investor hype or temporary demand spikes. It's rising because it has to. The supply deficit isn't a forecast. It's a present reality. Industrial consumption is at all-time highs. Monetary trust is at all-time lows. The U.S. government isn't just watching, it's intervening. Reclassification, tariffs, strategic stockpiling. None of these are random. They are signals, and they all point to the same conclusion. Silver is being positioned as a foundational asset in whatever system comes next. Gold has already made its move, breaching $3,700 on the back of relentless central bank accumulation. But silver? Silver is still artificially low, still sleeping, still hiding in plain sight. And that gap, that historic undervaluation, isn't going to last. Because when the monetary dam breaks, it breaks fast. And silver, with its dual role in both finance and industry, becomes the lifeboat no one saw coming, until it was already gone. We're not just approaching $100 silver. We're approaching a world where silver has to be repriced, not for speculation, but for survival. And when that revaluation happens, it won't be polite. It won't be linear. It will be explosive, chaotic, and final. So as the old system collapses under its own weight and the new one emerges from behind the curtain, one question remains. Have you already positioned yourself for what comes next? Because if not, the door is closing.
Silly. Luck. Instead, cost average. And if you have $100 to spend waiting for it to pull back, instead spend $25 a week for 4 weeks. You'll smooth out the uncertainty. The people who are talking, the talking heads saying that gold and silver are top heavy and are going to correct, you know, maybe it is, maybe it isn't. Maybe this time it's different. I mean, when you get to the end of a cycle, like we're seeing right now, a monetary cycle, maybe a reset, a reshuffling of the monetary deck, where gold and silver are becoming more central to, I think, the plans. Silver for national security on many levels, and gold for the backing of a new monetary system that is one that's built and centered around trust. Waiting for that pullback might be silly. You might turn out to get really lucky, and maybe it is a great thing. But instead of putting all your chips on red or black, why not just, cost average your way? And that's probably a more measured, safe way to make sure that you don't miss out. And in retrospect, which is always, hindsight 2020, maybe it would have been better to wait, maybe not. So I would choose to, fall on the side of cost averaging in smaller amounts, which you can always increase your speed if you feel the need to, or you see something that concerns you, or slow it down. So that would be, I think, a more prudent way to proceed rather than speculating, if you will, on something that.
Silver is no longer a bet. It's a blueprint. A blueprint for a world where trust in paper dissolves and real value returns to the things that actually matter. With a 45-year technical breakout now confirmed, a global physical shortage worsening by the day, and governments reclassifying silver as critical to national survival, the path to 100 silver isn't just probable, it's programmed. And it's unfolding faster than anyone thought possible. Gold has already surged past $3,700, with institutions and central banks preparing for a world where fiat currencies are no longer the foundation of global trade. Now, silver is taking its turn. The physical squeeze is intensifying. The Comex is being drained by insiders, and the public is still asleep. But not for long. Because once this monetary reset reaches its final stage, silver's repricing will be violent, permanent, and global. This isn't hype. It's the convergence of industrial necessity, monetary desperation, and strategic revaluation. The final reset is already in motion. The only question is whether you're watching it or still waiting for permission from a system that's being dismantled in real time. If you found this discussion valuable, make sure to subscribe so you never miss a critical update. And remember, this is not financial advice. Always speak to a qualified professional before making any investment decisions.